This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Cheryl Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. This is Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec. It is Tuesday, February 10th, 2026. S&P 500 briefly hitting an all-time high today, but I kind of came into the studio. I'm like, what happened to the equity trade?
Well, it was up as much as 0.3%, now down as much as 0.2%, now down 0.1%. It fizzled. That's the answer.
You know what didn't fizzle?
What?
Kind of what we're seeing in the Treasury trade. We have seen rates come down. A lot of it has to do with some of the economic news. Investors digesting the latest economic drop and getting ready for key reads on the U.S. labor market. That happens tomorrow. And then we get a read on inflation come Friday. So kind of working their way through it.
Fortunately, we got a great roundtable coming
right
up in
here.
just a few minutes. They can hear what we're saying. So maybe the U.S. consumer is not doing so well after all, what today's retail sales report and Treasury auction actually reveals.
Yeah, we're going to get into that. Plus critical minerals. We're going to take a trip with the CEOs of the U.S. Antimony Company and also CEO of America's Gold and Silver Corporation. They've got a joint venture. This is certainly a big focus of the White House, so we're going to see what they are up to.
Also, we're going to talk infrastructure and global spend. Cheryl McKissack Daniel, chair of the board of her family-run construction business. They play everywhere and in a lot of different infrastructure projects, McKissack and McKissack. She's going to be joining us a little later in the program.
I kind of want to say this hour as well as all 3 hours of Bloomberg Businessweek Daily, we're getting different reads on the U.S. economy, so a lot coming your way. First up, though, let's get a check on the trade on this Tuesday. Let's turn things over to Charlie Pellet. Charlie.
Hi, thank you very much, and here's what's going on. Absolutely right about that stock market fade, Carol Massar. We've got the S&P now trading lower, down 9, drop there of 0.1%. Have been very close to a record earlier on. The Dow, however, is at a record 50,168 on the Dow, up 33, up by about 0.1%. Any advance today will be a record on the Dow. S&P, as I mentioned, down 0.1%. NASDAQ Composite Index down 0.2%. The Russell 2000 Index of small cap shares lower now, down 0.1%. The VIX holding above 17. The 10-year 4.14%. The 2-year 3.45%. Gold down $48 the ounce, still above 5,000. 5,009, drop there of 1%. Silver down 3.4%. 80.56 the ounce. West Texas Intermediate crude below 64. 63.89 now, down 0.7. And Bitcoin now looking at a 2% drop, below 69,000. 68,928 on Bitcoin. Paramount Skydance has made enhancements to its hostile offer for Warner Brothers Discovery, stepping up efforts to woo shareholders to its bid over a rival one from Netflix. Right now, Netflix up 1.5%. Warner Brothers Discovery up 2.6%. Paramount Skydance up by 0.6%. Again, recapping, we do have S&P 500 index down now by 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So let's get to some of the economic data that we got today. U.S. retail sales unexpectedly stalling in the month of December, suggesting consumers provided less firepower for the economy as the year drew to a close. Those disappointing figures indicate the burst of activity at the start of the holiday shopping season proved to be short-lived. Households remain frustrated over a high cost of living and worried about the job market. That is our backdrop.
With a view on the economic backdrop and what it means for Fed policy, we've got Bloomberg Economics U.S. economist Stuart Paul with us. Also, Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey. He came across the river from New Jersey, and he's here.
He did not swim.
New York.
Might have skated.
I went under the river.
Under the river. I want to start with Stuart because the retail sales figure that we got this morning. Why were they a miss? Like, what is it showing about the consumer, at least in December, or extrapolate that to right now?
It's interesting. There's been a material pullback on goods spending Control group sales were down 0.1% month on month in December. Control group sales for the month of November were revised down. So even any strength that we thought we saw early in the holiday season really did fade upon revision. And so the consumer landscape is even weaker than we expected. A lot of this still looks like it is downstream from tariff policy. If you look at goods consumption fading, if you look at employment costs for goods producers fading, employment in transportation fading, the purchase of and getting goods to market is all still exceptionally weak. The major macro theme in today's data for the month of December and through Q4 is still tariff policy, and the fact that tariff policy is denting growth in the U.S.
Oh, okay. It doesn't sound good because this is our environment, or does it get better?
No, this is the landscape that we're going to be living with through 2026. Personally, I'm a bit surprised to see the consensus forecast for real personal spending growth this year at 2% year on year. It still seems exceptionally hot. When you see delinquencies on credit rising, and you see
I'm glad you went there. Right.
And you see saving rates as low as they are at 3.5%, it's really difficult to imagine a consumer-driven expansion this year.
Does it seem different than what we're hearing from company executives right now, Carol?
I feel like there's still a fair amount of optimism, and people talk about the economic growth.
I mean, we hear about disciplined consumers, resilient consumers.
Yeah,
I don't know.
exactly.
Yeah, but remember, when you're looking at the K-shaped economy, if you want to call it that, right? I know that's like the big in thing now. But if you think about the companies that you see, right? So the companies that are in the S&P 500, they're global, they're large, they have maybe some power to cut costs at the margin, right? To keep their margins up. Mom and pop, not so good, right? And the mom and pop shops have a lot of employment. That's where you did see a fair amount of wage gains in the past few years, post-COVID in particular. Now that seems to be slowing as well if you just look at some of the ancillary data that you can get.
We heard that from Brad of Hoboken Farm, CEO, of what consumers were maybe a little bit more picky in terms of what they're doing. I do want to bring into this, though, what we saw in terms of the Treasury trade, Ira, because so the expectations are that the Fed, if they had to make a decision today, would they cut rates?
So, the market is incrementally thinking maybe they're going to cut rates at least a little bit sooner than they had originally priced. But the bigger move today was on the long end of the yield curve, I think, for two reasons. I think one is the steepener trade is still pretty crowded. And while I think that's yield curve steepening, so basically short-term yields going down faster than long-term yields, that will continue, but it's going to continue in fits and starts. And when it gets very crowded and there's some catalyst for people to get out of it, you're going to see this jerk back like you saw today.
You're talking about the 10 specifically, or further out?
10s and 30s, right? Yeah. Today, when we came in this morning, when I was on the train on Jersey Transit this morning on my way in, and I looked at my Bloomberg app on my phone, the first thing that I noticed was, hey, Japan's 30-year rallied 6 basis points today, and it had been selling off for the better part of a month, and now pretty big pullback, and the U.S. and European rates followed that. And then the data that you just mentioned, right, that economic data, that just piled on to this already positive sentiment in the long end of the curve. So a lot of shorts, I think, getting stopped out too.
What?
Yeah, no, I'm just I'm also thinking, you guys have me thinking about the consumer a lot and what both of you have said. And I'm looking at shares of Coca-Cola right now, down 1.3%. Analysts wanted to see organic growth of 5.01%. The company sees organic sales growth of 4 to 5%. I don't know. It's is that a read, Stuart, on the consumer?
There are some intricacies around companies like Coca-Cola and eligibility for food stamps, some of which is policy driven. When we think about consumer staples generally, I'm not surprised to see that there's a little bit of optimism around staples. Where there is a little bit of frustration is around some of the discretionary spend, and there's a lot of frustration around discretionary spend on a lot of imported goods that are more durable in nature, high dollar value goods. Some of the things that you might be financing, putting either on layaway or depending on other
you can do anything on
credit.
Buy Now, Pay Later, it feels like.
That's true, too. But a lot of the big discretionary, durable goods items, we're starting to see a real pullback in.
I want to throw some other things. There's a great story on the Bloomberg about Dollar Tree moving into more higher income areas, with almost half of their new stores opened in the last 6 years in wealthier enclaves of metropolitan areas. And they talk about the wealthier consumer. BuzzFeed, not necessarily like it or not, but they do these lists and they're like, here's the 10 or 20 things that Americans say they can't afford. Everything from buying paper towels to manicures to concert tickets to a lot more. It's a range of things. These are the things that are out there. Meantime, you've got President Trump making some comments about U.S. growth, and he did this earlier on Fox. Let's just play it for everybody.
We should be at 15%. I'll tell you, if our new head of the Fed, who I think is going to be great, and he's a really high quality person, but if he does the job that he's capable, we can grow at 15%. I think more than that.
All right, 15%. That's President Trump earlier with Larry Kudlow, who, of course, was a senior aide in the president's first administration. That was on Fox. And the president, of course, weighing in on his pick for Fed Chair, Kevin Warsh. I mean, is that, Stuart, even possible that we could get 15% growth? And if we do, does that mean there's a lot of inflation with that?
We can't get 15% real growth. If the president were to really put his head together with Kevin Warsh as a Fed chair, maybe they could get 15% nominal growth, but that would be a lot of inflation. That's not the type of growth that he wants. That's not the type of growth that any typical American wants. 15% growth would require something. It's not plausible. It's not remotely possible.
Maybe
the amount of population growth.
I mean, during the course of his 4 years in office, that's
15% growth in the aggregate over several years, maybe, but a 15% annualized growth rate isn't possible with our demographics, with our investment profile, with any efficiency gains to be had for a developed economy. It's not possible.
Ira, in your view, what's a more realistic figure? What's an expectation?
Yeah, well, somewhere, look, real growth around 2% is probably not, that's fine. I think the challenge that we have in the U.S. is that a lot of the growth that we've seen recently has been really investment driven, and it's been investment driven in large part because things like credit spreads are tight. So even though all-in yields are way higher than they were 10 years ago, they're still way lower than they were 25 years ago, right? And when I first started on Wall Street in the late 90s, we had 6%, 7% Treasury yields, depending on where you looked at on the curve, right? And so we still have, interest rates are not particularly high, and they're not the barrier for investment right now. And when you look at, all of the corporate issuance, the investment grade corporate issuance, and that's funding a lot of the AI spend, for example, that's not the impediment. So credit, when you say that, when the Fed says that that policy is restrictive, you don't see it in a lot of the financial data and the ability for companies to fund themselves. Maybe their weighted average cost of capital is going up slightly, but they also think that their margins are going to be relatively high and they're going to see pretty good productivity gains.
20 seconds each. Job market we get a read tomorrow. It was supposed to be on last Friday, but it wasn't. Ira, could that potentially change kind of the feel in the Treasury trade like that?
Yeah, it could. I mean, if we get a pretty decent number and maybe some upward revisions, yes, but that's pretty unlikely. And I suspect that we'll continue to have a pretty good Treasury market, which means probably weaker economy.
Stuart, 20 seconds on jobs. What
Agreed.
are we watching?
I think that we're going to see job growth on the order of 10 to 20,000 per month throughout the course of the year. It's going to be a relatively weak labor market, very slow income growth, very slow consumption growth.
All right, you guys, thank you so much. Really appreciate it. Great to have you both here in studio. Bloomberg Economics, U.S. economist, also follows Canada for Bloomberg Economics. Stuart Paul here in studio, and Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey. And we're going to stay on the economy. Yeah, back with us is Elizabeth Renter, Senior Economist at NerdWallet. She joins us from Durham, North Carolina. We just spoke to Stuart and Ira about retail sales today, and what we heard and what we're getting in the data is a little different than what we're hearing from companies right now about their customers. How would you describe the U.S. economy?
Well, I think it's a mixed bag, particularly when you're talking about households. So we've been hearing about negative consumer sentiment for really the past handful of years. What has changed is the actual household financial conditions over that time. So bad sentiment right now, paired with a little bit of increasing household financial fragility, is concerning. Now, we know asset holding consumers continue to drive spending and economic growth, but an increasing share of American households are dealing with more affordability struggles and difficulty managing their debt.
Which households? Is it, I want to go back to this Bloomberg story. It's really great. It's Porsche, BMW, and Dollar Tree. And it talks about Dollar Tree targeting richer towns. And they say, the company says, shoppers who make over $100,000 are driving much of its current growth, with 60% of new customers making at least six figures and spending $1 more per visit on average. I mean, I don't know. What does that tell you? Anecdotal evidence? But does it say something about the consumer, even the wealthier consumer?
Well, I know very few people, even high earners, that aren't interested in a deal. I mean, I think the people that spend and aren't interested in spending less where they can are a very, very small portion of the American consumers, but they do make up a large portion of consumer spending. And I do think it's anecdotal. It's interesting when you talk about sentiment and consumer sentiment about the economy in particular, it's always a bit of a confusing picture. You know, for example, we asked late at the end of this past year how people were feeling about their finances going into the new year. And roughly a third said they felt optimistic or confident. And about the same share said they felt anxious or stressed. So not only are feelings going to differ from household to household, but it's entirely possible individuals could be having conflicting feelings on their own.
So if the consumer powers this economy and is responsible for the majority of what we see in economic activity, then what does it mean for consumers to say that to you? Does it mean they pull back on spending?
Well, I think theoretically, right? Yeah, that's what we've been looking for, is this negative sentiment to bleed into the spending data, and we haven't. And we know that's because asset holding consumers are the ones continuing to spend, no matter where they're spending. I do think, though, the longer that this negative sentiment goes on, paired with what we're seeing in the chilly labor market, in the chilly housing market, these things that hold people in place, the more that that's going to spread and could eventually leak into the spending data. Now, does today's flat retail trade growth indicate the beginning of that trend? It remains to be seen. We need more data to say that for certain, but it could be.
You know, the other thing I would say is, going back to the holidays, that's when people dig deep and they'll even go into debt because it's the holiday season. You kind of make exceptions and then you kind of cut back, you know, maybe in the rest of the year. So to see the spending kind of trail off makes me wonder what? I don't know. Like, is it more important because of the timing of that retail number?
Yeah, that's a great question. So the timing has something to do with it. And also that's why I'm looking at those retail numbers with a grain of salt too. They are adjusted for seasonal and holiday differences. The more seasonal and holiday differences you have in a given month, the more overcorrection or undercorrection you might see in that seasonal adjustment. So it's important to take 1 month of data with a grain of salt. The other thing to think about is, how are they paying for it? We know from data that just came out today that the share of delinquent credit card balances is at nearly 13%, and we haven't seen that since 2011. So I think there's no doubt that there is an increasing burden on American households. How that plays into the larger economy remains to be seen.
So if that's one of the important signals that you're watching, what's another signal to watch if the consumer is stressed? You know, we saw in the month of January, like the most number of layoffs going back to the financial crisis.
Yeah, so I believe the data source you're referencing is Challenger, Gray, and Christmas. That's another one I caution people about reading too much into, because it does look at announcements rather than actual layoffs. They had a huge number last October. I believe back then it was the highest number of layoffs since 2003, but that never made it into the official layoff data. So announcements are quite different than actual layoffs. I do look at actual layoff numbers from the BLS, but definitely debt numbers, debt delinquency, those are the ones I look at for household financial resilience.
Okay. Listen, I understand what you say about exceptions to data and seasonality, but you know, it's how you guys all make decisions. Everybody makes decisions. So, like, what is the data that says to you, here's what the economy is doing, or do you not have a clear picture and just got about 30 seconds?
Yeah, well, I think right now, and especially within the past few years, it's very, very difficult to get a clear picture. So much has been going on with the data. So much has been changing.
President Trump thinks we can get 15% with a different Fed chair. Do you buy that real quickly? I guess not.
No, I think when we bring this up.
I mean, he is the president. He sees a lot in terms of the economy.
Right. I'll echo what your previous guest said, and that 15% would come with inflation that no one wants to see.
All right, we're going to leave it there. Always fun to check in with you. Really appreciate it. Elizabeth Elizabeth Rentner. She is senior economist at Renter. She is senior economist at NerdWallet, joining us from Durham, North Carolina.
Coming up next on Bloomberg Businessweek, we are talking about mining for critical minerals. That's next on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We've got the Dow higher, not just higher, but trading at a record 50,200 right now. That is a gain of 0.1%. Any advance today for the Dow will be another record. The S&P, though, was flirting with a record, trading lower right now, 69.58, down 6, drop there of 0.1%. The Nasdaq Composite Index down 0.2%. The Nasdaq 100 Index down 0.2%. The Russell 2000 Index of small cap shares down 0.1%. The VIX just above 17, the 10-year 4.14%, with the 2-year 3.45%. Spot gold down $38 the ounce to $5,019, drop there of 0.8%. Silver just below $81 the ounce, silver down 2.9%. West Texas Intermediate crude oil 63.95 a barrel, down 0.6%. Bitcoin back below 69,000, 68,800. Bitcoin today down 2.2%. The iShares Expanded Tech Software ETF extending its 3-day win. IGV on the ticker, up by 0.6%. Goldman Sachs CEO David Solomon says last week's steep drop in software stocks on concern about competition from AI was likely overdone. Now, he made the comment at a UBS conference in Key Biscayne, Florida. Among some of those software names, Microsoft up 0.8%, ServiceNow up 2.7%, and shares of Salesforce down 0.1%. Recapping, S&P down 6, drop there of 0.1%. The Dow at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec live here on Bloomberg Businessweek Daily. Well, you might recall earlier this month, Bloomberg exclusively reporting out that President Trump was set to launch a strategic critical mineral stockpile with $12 billion in seed money, all in a bid to insulate manufacturers from supply shocks as the U.S. works to slash its reliance on Chinese rare earths and other metals. Meantime, you see a lot of companies doing deal in the space, Tim.
Yeah, on that today, shares of America's Gold and Silver Corporation rallied as much as 8%. This after the miners said it would partner with United States Antimony to construct and operate an antimony processing plant in Idaho. Some details here, and then we're going to get to the conversation. Yeah. Facility will be 51% owned by America's Gold and Silver and 49% owned by U.S. Antimony. It'll be located in the Silver Valley in Idaho.
All right, so let's get to it. Great to have with us Gary Evans, Chairman and CEO of United States Antimony Corporation. It's a $1.1 billion market cap miner, producer, and seller of antimony products. It's based in Montana. Stock is up 66% year to date, about 21% of the float short. Also with us is Andre Huet. He is Chairman and CEO of the $2.6 billion market cap precious metal miner based in Ontario, Canada. It is America's Gold and Silver Corporation. That company's shares are up about 61% year to date. We've seen it move in today's session. Gary and Paul both joining us here in studio. Welcome, welcome, welcome. Tell us about this joint venture, the financial aspects, how it actually logistically works down, and what it means in terms of critical minerals in the U.S. and just kind of elsewhere. So whoever wants to pick it up.
Yeah, I'll just start. So look, this joint venture, we've been working on it actually not that long, to be very honest. Actually, Gary and I were talking about it. We met about a month ago. 1 month ago, we met, both teams assembled at the mine site in Idaho. His executive team, my executive team. We were signing documents late last night with our legal teams, both of us at 10:30 at night, finalizing this. And this is a transformational deal, actually. This allows us to supply a product, antimony, to the U.S. From the beginning right to the end. So Gary's the expert in the antimony world. We're the experts in the mining world, and what we have is a mine, the Galena mine in Idaho. Right now, we've got about 330 employees. We just bought a second mine in Idaho. We closed it in December. So we bought the original one, transferred the whole management team, and made some big upgrades in capital. What we're doing is revolutionizing this mine. This mine's been around for a long time, and it produces 5 critical minerals. So we produce silver, copper, antimony, lead, and then a small amount of gold. But they're all 5 critical minerals, which is very, very important. And this deal is very important to us and U.S. miners and to the U.S. as a whole, because we need 50 million pounds of antimony per annum, and we're not even close to producing it, not yet. So this will allow us to start chewing away and getting some of that antimony produced domestically.
So, Paul, Andre Huet giving us the America's Gold and Silver Corporation view. Gary Evans, come on back in here and talk about why this deal made sense for you at U.S. Antimony.
Well, as you know, we're the only two. We have the only two smelters for antimony in North America, so Montana and Mexico. And currently, we're getting most of our supply from foreign sources. We get it from the country of Chad, Peru, Bolivia, Australia, Chile, Mexico, and we are looking for homegrown antimony. We are already processing Paul's antimony through another facility up in Canada. We receive that, and we can make antimony trisulfide out of it. So the idea when we met a month ago, our two management teams got together, we immediately said, look, this is an easy answer. We'll put our new technology that we developed in Bolivia last year. We made the first commercial grade antimony hydromet facility, and it's now we receive 150 tons a month of antimony from that facility. We can duplicate that in the United States. So we have the technology, we have the patents, we have the license for North America and Australia. He has the land, he has the supply, so it was a marriage made in heaven.
So why weren't you processing here in the U.S.?
Well, we are processing, but it's using foreign supplies.
Okay.
So he has domestic supplies, which the country doesn't have.
So the processing facility that you're going to be building?
Yes.
Give us timeline. When is it going to be running up at commercial scale?
That's a great question. He fortunately has all the permits that we need.
Right.
Okay.
So we are in the construction engineering phase now. We should start within 90 days and be done in a year.
Wow. So in a year,
Yeah,
it's
well-
up and functioning?
Yeah,
If you
fully
think about the
functioning.
last one, sorry to interrupt, the last one that was built in the U.S. was built in 1942 at that same area in Silver Valley, and it took 6 months to build it during World War II.
Right.
That was actually built. Gary's team just built one in 6 months in Bolivia. So these are not massive facilities, but they're very important facilities. So we will, once we get the engineering stages and everything done and we start construction, it'll go pretty quick from that time.
Carol mentioned Project Vault earlier this month. Bloomberg exclusively reporting out that President Trump's set to launch a strategic critical mineral stockpile with $12 billion in seed money. Gary, have you been in touch with the White House, the administration at all about this? How much antimony do you expect the stockpile will hold?
Well, we currently have a contract with the DLA, which is the Department of War, for $245 million to deliver antimony ingots, which is like a gold bar. It's an antimony bar. It's serial stamped. We put it on a pallet, we shrink wrap it, and we send it to the government. It's strictly for inventory. For all the subcontractors of the government, could be Boeing, Northland, could be General Motors. They need antimony to make their products. So we are the stockpiler for the government. And we're the only approved company. In fact, when it went out to gov.com, it said United States Antimony Corporation is the only company capable of bidding on this contract. And so the fact that we've been around 50-something years, we can do this. And so now we can take America's Gold and Silver's antimony through our new hydromet process and do the same thing.
Have you talked to the White House just in the last few months about this?
Well, General Jack Keane, I don't know if you know who he is.
Yeah.
He's on our board of directors.
Yeah.
And so he's been very helpful. We've already won the DLA contract. We have a Department of War grant coming. With our now new joint venture, we're filing a new white paper with the Department of War. We filed a grant request to the Department of Energy for $45 million January 15th. So we are constantly in the mix seeking capital to help grow this enterprise.
We're talking with Gary Evans, Chairman and CEO of U.S. Antimony, and Paul Andre Huet, CEO at America's Gold and Silver Corporation. Without the U.S. support and backing, would this be happening?
Yeah, look, there's no doubt what's happening now is changing things for us, and it's opening doors. This project...
Financially changing it, making it
well, we're going to be
possible?
one of the first groups, Carol, actually submitting this white paper for capital.
Okay.
And nobody's done that yet.
Okay.
We're the first, so which is really important. And I was just at the White House. In fact, I've met with a couple senators, governor, congressman, and it's very clear that this Project Vault, it creates a floor. It allows us to not have that volatility that we're up against. We've got to prepare ourselves for if China's going to dump a whole bunch of antimony on the market. We've got to be able to protect that pricing for us, like people like us who are producing it domestically here.
Well, let's go there because, you also have the U.S. reaching agreements with the European Union, Japan, and Mexico to cooperate on securing critical minerals used in various industries. So they have committed to creating price floors. What kind of price floor is needed for antimony? What would be the ballpark, the price that kind of would shield you from China oversaturating the market?
I think something in the $20 per pound range would be a great price floor that protects us. You got to understand, China has a 100-year plan. We've been sitting behind the 8 ball for 25 years, watching China go all over the world, take over countries, take over mines, and they drove the antimony price down to such a level, it drove everybody out of business. And fortunately, our company stayed alive. The only one that did stay alive.
Yeah. And
now we're reaping the benefit of having these refineries up and running.
Hey, Paul, you have lived all over the world. You've done this all over the world. A big part of the conversation is the U.S. reliance on China.
Yeah.
And I'm just curious what you're seeing, because the U.S. and China still haven't reached an agreement when it comes to export control licenses for rare earths and permanent magnets. Is any antimony being exported from China to U.S. consumers that's not military related? And Gary, feel free to jump in here too.
Yeah. I mean, I can probably answer this
Jared.
pretty well because we monitor it daily. China cut off all antimony exports to every country in the world, including the United States, in September 24. People think, it's got to do with Trump's tariffs. This was during the Biden administration. This happened. Well, guess what? China's biggest mine, called the Twinkle Star Mine in China, depleted last June of 24. So September, 3 months later, they stopped all exports. Now, are we seeing antimony dripping into the market, in the black market? Probably some, coming from Vietnam, Malaysia, Indonesia. But China has actually arrested 20-some-odd people. They don't want antimony going to the free world. Why? We all need it in military. You can't fire a bullet without antimony. Laser-guided missiles, night vision cameras, night vision binoculars. I mean, it's in everything you can imagine in the military. And so our administration, fortunately, has taken the lead in saying we've got to fix the critical mineral problem. And it is fixable, but it's going to take some time, and it's going to take a lot of money.
And the one thing that I heard coming out of the White House, Tim, was very clear. One of the messages I was talking about was, we need 50 million pounds, and we're going to be able to help make that solution. But it was very clear to me leaving the White House that we have to also think about our allies. And honestly, I never thought of that as CEO of America's Gold and Silver. I thought,
but go there, because there's so much conflict, it feels like, even with the U.S. and its traditional allies that have been there for a long time. You're saying we can't do that. We've got to be cooperating.
You're absolutely right, Carol. It was very crystal clear. It was made very clear to me, change your pitch even as the CEO of America's Gold and Silver. Change your story, because you don't just need 50 million pounds for the U.S. You need another 80% on top of that for our allies, who we have to make sure in NATO that we protect along the way, which honestly, for me, I didn't understand that completely. And I think a lot of people don't understand that. Never mind the 50 million pounds we consume per year.
Right.
Our allies is another 40 million pounds. So we've got a deficit here. China's been so far ahead, like Gary says. We're starting to help this situation significantly by this JV.
Which goes back to national security. You can't just think about your own backyard. You've got to think about your allies as well. Gentlemen, please stay in touch. Let us know how things are going. Gary Evans, CEO of U.S. Antimony Corporation. Paul Andre Huet, he is CEO of America's Gold and Silver Corporation. You are listening and watching Bloomberg Businessweek Daily. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headline right now off the Bloomberg Professional Service. QVC in talks with creditors about a possible bankruptcy filing. Stocks holding on to gains. At least that is true for the Dow, up 118 stocks. Yes, just 30 stocks, up 0.2%, but at a record 50,250 now on the Dow. S&P in the red, giving up earlier gains. S&P retreating now by 0.1%. Nasdaq down 0.3%. The Russell 2000 index, will call that unchanged on the day. The 10-year 4.14%, with the 2-year yielding 3.45%. Gold down 0.6 at $5,025 the ounce. Silver down 2.6%, $81.21 the ounce. And Bitcoin now down 1.8%, $69,121. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we do want to point out that we've kind of been looking at the economy and talking to different people that are giving us different perspectives. And we want to kind of go back to that, because another great metric is when you think about activity around building and planning around projects to build the future.
Our next guest has an incredible window into all that. Her 120-year-old family-run firm, it's a construction firm. It's been behind some well-known and very large projects that everybody knows: the Barclays Center in Brooklyn, the Oculus in Manhattan, the new Terminal 1 at JFK, the Lincoln Financial Field where the Philadelphia Eagles play.
These are cool projects.
Yeah, they're big. This is infrastructure.
This is infrastructure. Great to have back with us as we dig into our weekly Women, Money, and Power, where we speak with some of the most influential women across the business world. Cheryl McKissack Daniel is chair of the board of McKissack McKissack. She joins us from Westchester. She's also author of The Black Family Who Built America, The McKissacks, 2 Centuries of Daring Pioneers. That book coming out last August. Cheryl, it is good to have you back with us. We want to talk to you about a few things. But first up, we are kind of throughout the 3 hours here on Bloomberg Businessweek Daily looking at the economy in different ways. And when people are building things or talking about building things, willing to commit to projects that might take a few years to complete or even longer, it's a great read on the economy and comfort about the longer term. What are you seeing? Are people comfortable about building and making plans to build right now?
I believe they're cautiously optimistic. I think that's the best way to put it. We just finished JP Morgan Chase's corporate headquarters, beautiful building constructed over a period of, I want to say, 5 years. And then we're at JFK Terminal 1. And Terminal 1, as you know, was supposed to open in July, but now it's opening in October. But there has been a little slowing down of Phase B while we're in the process of securing new airlines to take gates. And so it really depends on the market you're in. I know you're aware of what's happening with Gateway.
Yes.
Huge concern for the construction community. A loss of 1,000 jobs on Friday, and numerous consultants who were participating on that much needed critical infrastructure.
This is the $16 billion Hudson River Rail Tunnel that's largely come to a halt due to the Trump administration's decision to freeze its funding. Is McKissack working on that at all? Is it involved with that?
No, we are not working on that project. We were on the original project when Governor Christie stopped the project.
I know that's how long this has been. That's how long this has been going on. I don't need to tell Carol because she comes from New Jersey every day. But,
oh my God! And New Jersey politics is always engaging.
It is, but it raises a really important question, Cheryl, and that's about cities and the federal government working together. It's about private companies, family-owned companies, large corporations working with cities and the federal government. That dynamic seems to have really shifted in the last year, and I'm curious about your view, because you work with so many different agencies, state, local, and federal, how you navigate an environment such as this.
Well, when you look at the complications of just sheer building in New York City, you wonder how anything ever gets built. But what I have learned is by developing very good relationships with the building department, with the architects, the engineers, the politicians, the developers, everyone has to be on board, because you don't ever know when you're going to need to contact one of those individuals to help push a project along. And I have seen that over my 35 years of building in New York City, that the relationships really matter. You don't know if it's going to be the fire department. You don't know what it's going to be. It might even be the MTA, because the MTA, is throughout the entire city. And if you build within a certain range of their property, then you have to involve them. And so it's just one of the most complex, complicated cities to build in the world.
What's interesting about construction right now? Is it I think about, it's interesting, we're talking about the White House and the EPA and kind of getting ready to, it feels like, roll back things that have been so important to protecting climate and people's health in general. And so we've seen trends in buildings being cleaner, LEED certified, and so on and so forth. But when you look at what's going on, what are the trends that you are seeing when it comes to construction right now?
Well, definitely now we have the Climate Control Board and the climate control goals that the governor would like to see in place. So we're definitely seeing more buildings come online that are all electric. Which creates a whole nother problem all by itself, because where is all the electricity coming from? We are so close to capacity. I think next year we're at capacity with all the electric vehicles, all the buildings, all the data centers.
So what is that? What are the implications of that? Does that mean that we don't actually have the electricity that we need? Does it mean we see rolling blackouts? Does it mean we see people who have electric heat not being able to heat their homes in the winter?
Well, I think we've run into that already. The grid just cannot support the supply.
But those are two different things, right? One is grid resilience, and the other one is actually electrical capacity.
The power itself.
The power itself. And you're saying we don't have the power, right?
Both.
Yeah.
I'm saying we need both. We need both.
Yeah, I think this winter has proven that here in New York for sure.
Yes, and so we're going to have to be innovative around that. If it's firing up old plants, hydro, electricity, whatever it's going to take, because the demand is just so great.
It's time to harness the sun at this point. It's pretty, we talk about the affordability issues. I mean, we were just talking at home last night about our electrical bills, like trying to understand, and we've done things, energy efficient light bulbs and all that good stuff. And it's just crazy. Hey, before you go, I know already we're going to have you back. Your book, this book, The Black Family Who Built America. You are the 5th generation leader of your family owned and run firm, roots back to Tennessee, really family roots even further back here. Tell us why you wanted to write this.
Well, I wanted to get this story out because it's extremely fascinating to have a Black family that's in a very difficult profession of architecture and construction to make it to 5 generations. I mean, as we know, it's difficult to have a second generation. It's about 40%, third generation's 18%, and fourth generation's like 3%. So to make it to the 5th generation is an incredible feat. And so I also wanted to get out this book, especially during the time of erasure of Black history. This book talks about another side of history that a lot of people don't know, because now the name of our book is The Black Family Who Built America, but of course we didn't build all the buildings in America, but Black people had largely a big hand in building a lot of the structures in America, and we're like the hidden figures. And it makes sense. I mean, history and books follow money, power, and authorship, right? Not necessarily labor. And we were the labor behind these buildings and structures. We weren't able to seal documents. And so although we could have been constructing and designing, we were pretty much forgotten.
Cheryl, promise that you come back soon, because we would love to continue this conversation. Take care, be well. Cheryl McKissack Daniel, she's chair of the board of McKissack McKissack, the book, The Black Family Who Built America.